Hello everyone, welcome to your Retirement Resources Friday update. We know that the market is not doing so well. We finally reached a bear market. Inflation's doing really well if you're bull on inflation. Unemployment has been pretty stable. And what can you do now that we are in this kind of environment? What are other alternatives? There are other alternatives. All right, let's get into it. So, just to dispel everyone, no matter what anyone tells you, there are other things other than stocks and bonds. We have annuities, there are CDs, there's inflationary protection bonds. They're called I bonds. If you're interested in I bonds, I'm going to have a video later on the steps you take to actually go and purchase one, where you can get it. It's actually from the US government treasurydirect.gov, so it's not like through your brokerage or to your financial advisor or even through me. And I'll talk about an annuity that I think is probably something you all should be kind of considering, especially if you don't have long-term care insurance or if you can't qualify for long-term care insurance. Okay, so there's no alternative. We just went over that. There are other alternatives, and even within the landscape of like long-term care insurance, you can get other things to pay for long-term care insurance that aren't fundamentally long-term care insurance. There are things that are fundamentally not stocks that move like stocks. There are things that move like the market but also not like the market. There's all kinds of things that you can do. Even if you are a regular consumer like you and me, you don't have to be a big hedge fund manager or some really wealthy dignitary to invest in a lot of these things. Now, let's talk about the market. So, market here. I like to look at charts, and what I'm going to do is, this is from yesterday, so for those of you who are watching this as it comes out, the market's still open. It's 1 p.m. Eastern Standard Time. I'm in Central Time, so it's actually 12 o'clock right now. But market's still open, and we are down, I think. Hang on. Qs are up. Nasdaq is up. SPY was battling a key level a little earlier. Let's check it out. SPY is up too. 0.33%. So we did drop negative. Of course, we opened lower and now we're a little bit higher, but we're just right around that area, the 366 level. They're using SPX here, so let's go find the SPX. XPX is 3678, so we're higher than we were yesterday, quite 10 points higher. So doing a little bit better. But what this chart, and I wanted to show you, is right here, the bear markets of the S&P 500. So bear market is typically defined as 20% of a pullback. And we've had quite a few. This is definitely not the first time we've been here. It's just the first time we've been here for a while. We did bleep it a little bit, in 2020. But the most kind of remarkable and long stretched bear market was in 2002, 2003, this area here, 2001 through 3. So not very, kind of a long time ago, but not too far where most folks who are probably watching this kind of remember. And it's a serious downturn, and we're just kind of in that beginning of it. And due to the Federal Reserve kind of stance on their battle with inflation, how inflation is still their number one kind of goal, unless the economy shows very, very good inflationary numbers, meaning that inflation year over year is going down, month over month is going down. I don't think the market will have a quick turnaround. Granted, to be 100% honest with you, I believe that the bounce will come before the news. If you guys watch my technical analysis class, you guys would see that a lot of the reversals in the stock market happen before the economic news comes out. And that's just simply because the market is forward-looking, while economic reports are obviously at least a month delayed. So we are probably going to see a little bit more pain coming through. You know, like I said, I'm not a financial advisor, and that's just my take on it. For the S&P, we can see here we've had a pretty good day. This is the 1 minute chart, so obviously it's not a whole lot of data. Most people look at something like this. This is back in 2020. So we've had a really, really bad month, and we're still in a constant or pretty bad downtrend here. So, you know, just keep that in mind. But, you know, this was last year. If we somehow manage to come back, we may make a V-shaped recovery, which it means don't sell now. But also, if you need money, or you know, you need to survive, that's, you have to take it out from somewhere, right? So something to think about. Also, some things to think about here is this, you can download this from me, is what issues should I consider when dealing with high inflation in 2022? And a lot of it is, do you need it? Do you need the money right now? Most of you folks aren't working, but if you're retired, are you concerned about your retirement income? Be mindful that, you know, retirement sources like Social Security will kind of start increasing their COLA. And I talked about, I think 2 or 3 weeks ago, about how there may be a double-digit COLA increase as the PCE inflationary numbers were closer to like 9 or 10. So the core CPI has a lot more components to it, whereas the PCE is more of like what people are actually spending. So that one's higher. Some things you can do is get a savings bond, I-Series savings bond. Right now they're paying 9.62%, which is really high. You can get CDs, you can get multi-year guaranteed annuities. You can also get fixed income annuities, which is what I'll be kind of talking a little bit about later. And if you want this checklist, it's free. I'll go ahead and attach it to the email. If you're not on the email list, you can just send me an email. My email will be down below in the YouTube video, where you can just go ahead and request one. So I wanted to talk about this, and this, again, full disclosure, this is a product that I offer, but I heard about it and I think it's really something to look into. I myself can't purchase it, I'm too young, but I think this is probably one of the better products, and you're going to see a lot of good annuities come to market, because as the 10-year bond starts getting high finally, let's see if Ameriprise has a 10-year bond in here. Yeah, a 10-year bond at 3.25. Annuity products that usually have a 10-year surrender period will have a lot more juice to give. Juice meaning more benefits to give, and it's quite amazing. So for fixed index annuities, this can protect you because there's no risk to losing money. You do have some upside potential. It does correlate you to the market in a way, and provides you with like a laddered 20% 5-year kind of tiering system. I think they have a visual here. Oh, perhaps they don't. There it is. So where you're kind of invested in 5 separate baskets, each one doing 1 year to 5 years. And in addition to that, you get a 15% bonus when you put money into the annuity. Now this is an annuity that's made for income, so the 15% of the money you put in isn't like a 15% cash bonus. It's a 15% crediting bonus, where the crediting base level is the base level of what your fixed income, guaranteed income for life, is going to be based off of. And one of the things, of course, is that when you do have something like this, you can lock in your gains. So every time you lock in a gain, you can never go below it, versus if you're in the market, as you know, you can lose 20-30%, where something like this, the only way you could lose something that massive is if you took the entire policy out before your surrender period was up. Probably in this case, it probably within the first year, because the surrender period is usually only going to charge you about 12%. So even if you did want to take everything out, you're not going to lose 20% like you did in the stock market. Not to say the stock market is not good. I mean, I trade stock options and index options almost every day, so I'm in the stock market. It's just I don't buy and hold. I buy and sell quickly. But anyhow, the benefits of this thing. So long-term care. This is an alternative to long-term care insurance. If you cannot qualify for long-term care insurance and you know you're going to need some in the future, this policy has a 1-year waiting period once you put it in, and a 90-day deductible period when you have an event. It's very similar to long-term care insurance. And what it does is, whatever your income base or your income is, let's say you're drawing $5,000 a month or something, they will double that income if you need long-term care services. Now it's not paid out as long-term care like insurance does, where it's tax deductible, but believe me, if you are paying for long-term care services, your long-term care services costs will be probably more than 7.5% of your AGI, which is the threshold where it can become tax deductible. So I'm not a CPA or a tax advisor or anything like that, but that is something to think about. Also, Social Security. If you're worried Social Security is running out of money, if ever Social Security falls short and they actually decrease benefits, if they decrease it by 3%, then this annuity will actually pay you your deficit of Social Security benefits. So it's another thing to be pretty interested in. A legacy shortfall. So instead of taking out like the death benefit amount, which is usually a reflection of your cash value, which usually gets really heavily depleted once you start using it, you can actually take out some of the crediting portion over 5 years. Instead of having it all lump sum at once, if you decided to take it over the course of 5 years, in this example, if you had a $300,000 base death benefit, you could have a $500,000 death benefit if you were to take it over a 5-year period. So this thing is pretty good. I really like it. I wanted just to show it to you folks. You can ask your advisors about it, just to kind of really be more versatile. When I was a financial planner, and I'm going to take a small tangent here. When I was a financial planner, we had kind of direction from the firm, and also we had, I don't want to say we had a upper hand, but we could do things that insurance agents couldn't do. We could help you with stocks, bonds, mutual funds, ETFs, managed portfolios, whereas an insurance person couldn't. And it was a good thing to talk about because, well, annuities are all bad, right? It's not that simple. Annuities have high fees. Annuities have very, very strict restrictions on them, and for good reason. They're providing unlimited income and guarantees. When you have those kinds of things, you can't be loose with your rules. When I trade, if I was loose with my rules, I'd always lose money, because once something would go wrong, I wouldn't hold. I have to have conviction when I get into a trade. Same like this. You have to have conviction when you get into something like this, and it makes you think harder, play scenarios in your head to make sure this is something really for you. This is obviously not for everyone, right? Some people can't even, if you only have, let's say $100,000, it might not be enough, but it might be enough for you. It really depends on you. But definitely you can't be putting in $1,000 into this thing, right? It has to be a substantial amount. And that's where we have, problems can arise. Maybe you don't have that much money. Maybe you have to start smaller somewhere else. Maybe you're not retired yet. But if you are retired, then this is something that is an option You don't have to just invest in the stock market or put your money in like a bond fund that's been tanking, right? Because bond funds have been historically bad. So even if maybe right now you're getting a bigger coupon potential, bigger like interest payment potential, the face value of all of your old bonds have completely been hammered down because the interest rate has been rising. And as we know, interest rises, prices of the bonds fall, because why would anybody pay face value of a bond that's paying 1% interest where now they can get it paying 3? So a lot of times there are other alternatives, it just no one talks about them. And I hope with this channel and everything that I talk about, you guys can kind of see what there is out there. Like I said, I, full disclosure, offer and sell this product, but that doesn't mean you have to buy it or sell, or talk to me about it. You can talk to your financial planner about it, whoever you want. If you want to learn more, you can let me know. I will have to kind of get more information from you to make a sense of what's even possible, like notionally, because if $2,000 a year might not be anywhere near as much as you need, so we can't even talk about it. But at least information before we start getting deeper into it. But I hope that helps. I didn't post one of these last week because these videos have been getting very poor watch time, and if you do like it, do share it with people you think might be interested in these kinds of things. Even with my Medicare Monday video that's coming out on Monday, it's gonna be a good one. It's a long one, a lot of information, but I think it'll be good to watch. And I hope that you guys have a great weekend. The Medicare Monday video is coming out, even though we have the holiday on the 20th. I already recorded it before this video, so it'll be out there on Monday. You guys have a great weekend. Stay safe. I'll see you in the next video.